Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore. Now, David, as always, great to have you on the show.
Hey, selamat tengah hari, Brian.
Now, David, before we get your sagely advice, we're going to take a quick look at crypto markets and how they've been performing, and also regional stock markets for the first half of the day. We start with Bitcoin. Bitcoin has rallied. It's at 21,539.4. It's up 0.99%. Ethereum is at 1,676. It's up 3.26%. Now, looking across the regional stock markets, I'm so sorry, I've read the wrong numbers actually. So Bitcoin is at 19,330.3. It's up 3.26%. Ethereum is at 1,639.77. It's up 8.45%. Now, looking at regional stock markets, the SGX Straits Times Index is up 0.86%. Bursa Malaysia is up 0.16%. Shanghai is down 0.16%. The ASX All Ordinaries is up 1.59%. The Nikkei 225 is up 2.11%. The Hang Seng is down 0.47%. And rounding up the numbers, we've got the Kospi, which is up 0.39%. Now, David, what's your view on the mixed performance of markets this morning?
Hey, Brian, just for interest's sake, does anybody care about whether Bitcoins is 19,000 or 21,000? Apart from you? Well, I certainly don't care. What is that? Anyway, I'm sure there are lots of people out there who are very watchful about what is going on with cryptocurrencies. But with regards to the market, I think it's just a kind of follow-on, risk-on approach after the sterling performance on New York last night. So we saw the Dow, the S&P 500, and also NASDAQ sort of rising yesterday. But the curious thing, Brian, is why did it go up? And part of the reason why it went up was because oil prices came down. And so when you have a look at West Texas Intermediate, the WTI, I mean, that was down below $90 a barrel now. So people are saying, hey, you know, one of the biggest components of inflationary pressures, which is oil prices, I mean, that is starting to moderate. So they think that perhaps inflationary pressures are being capped to some degree. But then ask yourself the question, why are oil prices coming down? Oil prices are coming down because people are driving less, people are going out less, industry is using less oil, China is using less fuel. So whilst it is great to see inflationary pressures come down, at the same time, the reason why it's coming down is because the global economy is going into some kind of slowdown, some massive slowdown. And what is that going to do to corporate earnings if corporations are going to be slowing down and making less profits? So why exactly is the stock market so joyful that we are going into recession? I mean, that is the curious irony of the stock market, that on the one hand, it is good news, but on the other hand, it could be not so good news as earning per shares for certain companies in America start to come down and start to moderate. And that will give no reason why people should be jumping into certain shares. That's my take on things.
And David, now speaking, and obviously, looking at the threat of inflation, and energy is a big part of it, and perhaps moderating in terms of inflation, but yet the rate hike that is pretty much baked in for most investors' minds for later this month by the Fed is a 75 basis point rate hike. Do you hold that view as well?
Well, the thing is, I mean, around 80% of those people who were asked reckon that there is going to be a 75% basis point rate hike by the Federal Reserve. In other words, it's going up 0.75%. I think that is unavoidable simply because when you have a look at inflation in the US, they have no choice but to go and increase those interest rates. There's going to be probably a 75 basis point increase in the ECB as well. I mean, this will be the first time they've actually had such a supersized hike for a very long time. So I don't think there is any choice, but interest rates are going to go up. But why would people think that supersized in terms of the Fed is only 75% basis point? Why not just go the whole hog and just go for 100 basis point? I mean, that would really sort of send signals to the market that the Federal Reserve is determined to control inflation. And I think this is the worrying thing, because everywhere people are sort of talking about the king dollar. They're talking about the US dollar rising, and that is forcing the hands of many central banks over here in Southeast Asia. So the Bank of Thailand, Bursa Malaysia later on today, they will have no choice but to go and increase interest rates as well, because otherwise it is going to mean that their currencies are falling behind that of the US, and they don't really want their interest rate differentials to be too wide compared to the US. And I think that is going to put a lot of pressure on Southeast Asian economies. We've already seen what is happening to the Chinese yuan. I mean, the renminbi is actually knocking on the 7 handle at the moment. So there are lots of people around here that are very concerned, because the other thing, Brian, is that take Singapore. I mean, Singapore imports most of this stuff from outside, and they don't really want their currency to weaken. So when you have a look at the Singapore dollar versus, say, the US dollar, it's kind of holding firm, because the MAS does use currency as a means of controlling inflation. And they also know that the currency, the Singapore dollar, has to be strong if they are going to be importing stuff from outside. You don't really want a weak currency, which brings us to what's going to happen to Bursa Malaysia at 3 o'clock this afternoon.
And that's the thing, right? Because the Bank Negara has been lagging behind in terms of policy rate hikes. The expectation today at 3 p.m. is a 25-point hike only. So again, it will lag, and there has been a significant weakening in the ringgit. I think it's now at the lowest point since the Asian financial crisis in 1998. I believe that's the last time the ringgit has tested these levels. And that's really a policy dilemma, as you've mentioned just now.
But the thing is, I mean, when you have a look at Bank Negara, I'm sure they're sitting around and sort of saying, what exactly do we do? They've got 3 things to worry about. The first one is, what is the currency compared to the US dollar? The second one is, what do we do in order to control inflation? And we know that inflation in Malaysia is running at around sort of between 4.5%, maybe even 5%. So there is an inflationary problem. But at the same time, we can also say that the Malaysian economy is growing. I mean, you're looking at sort of 8% annualized GDP growth. So I think Bank Negara has the option, if they wanted to increase interest rates even further to try and sort of bring down that sort of economic growth rate, and know that it's not really sort of going to damage the economy in any way. But that cannot be said for other economies in Southeast Asia. Not everybody is experiencing 8-9% GDP growth. And what do? Do they actually sort of look at their currency and say we need to increase interest rates and risk sort of sending their economy into slowdown or even a nosedive? It's not an easy decision, I think, for Bank Negara, but you're right. I think 25 basis point looks almost baked in now.
Now, David, as always, thank you very much for coming on the show. Thanks again for your insights.
Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.